Financial Review Show. In this week's episode, we'll be looking at Tottenham Hotspur. Tottenham Hotspurs are an English Premier League football club, and I suppose what's really driven me to look at this club today is that the English Premier League is one industry that would have been impacted by COVID, and the subsequent lockdowns would have had an impact on football clubs having to stop matches, and then when they came back for a brief period, they had to play matches behind closed doors. So that would have had an impact on the revenues. So I want to look at the impact on the financial trends of Tottenham Hotspur. So that's what I'm going to do in this video. Okay, in this first visualization, we have got the trends of Tottenham Hotspurs across the 4 years from 2018 to 2021. So one thing you'll probably see is after 2019, revenues began to decrease, and that would have been as a result of the lockdowns, as I mentioned. There would have been a reduction in those match receipts for football matches. So there's declining revenues from 2019, as I said, due to lockdowns. The next in the blue here, you can see the cash generated from operating activities has also seen a negative trend from 2019. So that would have been directly driven from the decrease in revenues there. So obviously the operating cash would also be adversely impacted by that. So in 2020, there's actually negative operating cash of negative 17 million, which clearly isn't good, I suppose, as we begin to come out of lockdown. Tottenham will be hoping now, I suppose, to recover those revenues. The trends here in the accounting measure, so that's the operating loss, that's an accounting operating loss. In 2020 and 2021, there was profits in the years before that, in 2018 and 2019, but they then moved to losses. So what we're going to do is we're going to look at from 2019 to 2020. There was a movement, so there was 102 million profit in 2019, and that moved to 40 million loss in 2020. So we're going to look at the main movements, making that up, and then we'll look at what is driving this movement from 2020 to 2021. Just look at some of the key items then that is driving these losses. Okay, in the previous slide we said that there's an operating profit in 2019 of 102 million. So if we begin there on the left of the chart, we look on the right hand of the chart, we'll see the operating loss of negative 40 million, as we've seen in the previous slide. So the key movements are set out in this slide. So that's actually a 142 million swing from a profit to a loss during 2020. The main item is the decreases in revenue, and that would have been mainly driven by the lockdowns, I would suspect, in terms of the loss of gate receipts on football matches. There was a 46 million increase in depreciation. So what would have happened there, Tottenham moved into a new stadium during 2019. So what would have happened is that there would have, because that asset came into use, I should say, depreciation then needed to sort of being applied on the new stadium. So that resulted in a higher depreciation charge, because those costs that it took to build the stadium need to start being depreciated and written off now that the stadium is in use. So that is the main driver of that increase in the depreciation charge. The next key item is there was an increase in amortization and other costs. So effectively what amortization is the writing off of the value of players. So that's what that is. There may have been an increase in investment in the playing staff, and then that cost then get amortized over the length of the contract. So that is driving up the main difference between the 2019 profit and the 2020 loss. In the next slide, we're going to reconcile the 2020 loss to the 2021 loss. So I'm going to show you that in this next slide. Okay, so the operating loss in 2020 was 40 million, and that grew to a loss of 62 million in 2021. So that is a 22 million increase, and how that 22 million is reconciled in these movements here. So some of the key items I'm just going to pick out. So during the year ending June 2021, revenue decreased by 31 million and compared to the other year, and I suppose the impact of lockdown is still being felt here. Staff costs increased 24 million, and then in those amortization costs they were 9 million higher. So all those adverse movements was then offset by savings or reduction in other operating costs. I suppose with the reduction in revenues, Tottenham would have put in places to try and save costs. So that would be a favourable movement. So that is bringing us back to our 62 million loss. So we can see the dramatic impact that Tottenham has had as a result of the lockdown, I suppose. And in the context of trying to finance and build a new stadium, it probably was far from ideal for the management of Tottenham. Okay, in this visualization here, we have got the profile of Tottenham's assets, liabilities, and equity. So if we go from left to right, from 2018, 2019, and 2020, the non-current assets, which are the assets that will be consumed in a period greater than 1 year, so long-term assets, it was growing and then it decreased. So I suspect what was happening there would have been purchases of property, plant, and equipment in relation to the new stadium. The stadium would have then been opened and brought into operations, and then once that happens, depreciation would happen. So that would then, I suppose, maybe explain why the non-current assets stopped increasing at that point. The second thing I want to draw your attention to here is the assets are at the top of this line, and how those are financed in terms of liabilities and equity are shown below the line. So you can see the light shade of red and the red here are the liabilities. So that is making up a higher proportion of Tottenham's financing. So you could say that Tottenham are predominantly financed here by debt, if you're to take it at a high level, and we'll look at the gearing impact on that in a few slides time. So just to pull out some of the key figures in Tottenham's balance sheet at 2021, of that 1.6 billion of non-current assets, 1.3 billion relates to property, plant, and equipment, which I suppose would be the stadium. Current assets, of that 191 million, 148 million of that is relation to cash and cash equivalents. And you can see the big item in that non-current liabilities is 1.2 billion of 1.2 billion relates to non-current liabilities. They are liabilities that will need to be that are obligated to be paid within a period greater than 12 months. So when we look at the key item within that is 853 million of interest-bearing loans and borrowings. So you can see there's a lot of debt, I suppose, that Tottenham have taken on to finance the development of the new stadium. So with that, they'll have to pay the interest. So that's just quite interesting, I think, when we've visualised the balance sheet movements of Tottenham. So in the next slide then, in this slide, we are doing a profile of Tottenham's cash from 2017 to 2021. So the blue columns are the cash balances at the end of the year, and then those movements are shown in the green and red. So green is an increase of cash, and red is a decrease, and that these have been categorized in terms of, this is taken from Tottenham's cash flow statement. The cash flow statement is broken into cash from operating activities, investing activities, and financing activities. So cash in 2017 was 200 million, and that fell to 148 million in 2021. So you can see the two key items are these investing activities during 2018 and 2019. So it was 475 million of cash outflows in relation to investing activities in 2018, and that grew to 416 million during 2019. That would have been as a result of investing in the new stadium, so there have been large outflows as a result of that. And then the cash and financing activities, you can see that we noted in the last slide that the non-current liabilities were quite high. So that is the receiving cash, but as a result of that, the liabilities would increase because that needs to be paid back. So that is coming through from our balance sheet. So that is just a profile of the cash movements of Tottenham. So the key highlights, we can say that from this review, at 2021, the revenue was 360 million, and that is down from 392 million in 2020. Operating loss was posted of 62 million, which was 22 million higher than the previous operating loss of 2020. And you can see the main reason of that was due to revenue decreases and increased staff costs. In terms of their gearing ratio, so gearing is really the percentage of the financing that is made up through debt. So the higher gearing ratio, you want a lower gearing ratio. So the higher the gearing ratio, the more risky the company, because it's debt financing and that debt has to be paid. So we have carried out a ratio calculation of their gearings, which is available. I'll speak about that at the end. So that gearing is 83%. In terms of the cash and cash equivalents, at June 2021, the cash is 148 million. And some of the key items in relation to the past 4 years of cash flow movements is that there's been 1 billion of cash outflows for acquisitions of items of property, plant and equipment from 2018 to 2021. And then another figure to draw your attention to, there has been 73 million of cash outflows in relation to interest paid from 2018 to 2021. With the borrowings, there comes interest, so that's the figure for the interest over the 4 years. Just to pick out some of the key ratios then, so the first one here is the operating profit, or in this case a loss margin for the last 2 years. So operating profit margin was 22% in 2018 and 2019. That would be relatively healthy, but in 2020 and 2021 that decreased due to those trends we were seeing. So in 2020 they had an operating loss margin of -10, and that grew to -17% in 2021. So you can see here just from that visualization that the operating performance of Tottenham has been adversely impacted. And then in this next visualization, this is the gearing ratio over 4 years from 2018 to 2021. So you can see that the gearing ratio has been steadily increasing. So that we've seen with the profile of the liabilities increasing. The gearing is the percentage of the financing that is made up of debt. So if that's getting bigger, that's more riskier. So just with the stadium being built, Tottenham have had to maybe take on financing, and that result has led to this higher gearing ratio. So it's quite high there, 2021 of 82%. So thank you for watching. This is episode 2 of the Financial Review Show. We hope you enjoyed it. To support the channel, like the video, hit that subscribe button. And if you want to purchase the workings or the visualizations that we went through today, I'll also be making the slide deck available as well. There is a link in the video to Gumroad where you can purchase the product. I will put that in the link just below the video. So hope you enjoyed that. If you want to engage, by all means do so. If there's a certain company or an organization you want us to look at, we'll do that. This is an educational channel just trying to make finance accessible through crafted visualizations. So thank you very much and see you next time.